Joining us again, Bob Utterback, Arlan, Suderman, Bill Biedermann to talk markets. All right, we just heard from a southeastern Colorado producer, Bob, faced with very dry conditions in the eastern Corn Belt. However, seems like moisture is more than plentiful at this point. Do you think weather impedes spring planting this year?
I think it's going to have impact in the central and eastern Corn Belt because we're already behind because of early spring field work. But, everybody can get the crop out pretty fast. So I don't think the trade should get too far ahead of itself until we're probably about the second, third week of April. But one farmer told me, if he can still plant corn the 10th of May and still have the same yield. But the big impact on him is if the drying cost goes up, if we stay with these high fuel prices, and he might switch some corn acres to beans just because he doesn't want to incur that high drying cost. So I think the corn acres, I don't think you can grow the corn acres from here with the weather forecast I see, but I don't think you can drop them a little, but there is a risk that corn acres will go down a little and bean acres go up. And so that means guys that are hedged in the 22, I think you have tremendous risk exposure. I don't think you need to be short futures. You got to be short the cash, long a call, or long a put. But you don't want to have a short futures unless you have an exit plan for margin call. And your focus should be on the 23 and 24 marketing season, which now are above $6. And those are some long-term, I think, some areas that you got to start focusing. How would you sell it if you get a summer weather scare event? So there's a lot of challenges in front of us, a lot of opportunities, but it's also going to be a challenging next 3 to 4 months. And it's going to test everybody's resolve to know what you want from the market, plan it, and then work the plan.
Arlan, you mentioned the South American drought earlier. When do you think the market fully comes to term with just how widespread that drought was and the impact that it has on overall production, and then the impact it has on the supply and demand balance sheet?
Yeah, we're already looking at very strong bids for this summer coming out of Brazil's FOB ports. So we're anticipating that we're going to see strong export shipments out of the United States this summer, much stronger than normal, that are going to tighten up our old crop supplies. And I think that's when the market will start to deal with it. USDA simply cut Chinese demand. And China certainly does have some negative hog margins right now that's discouraging consumption, but yet they're worried about getting enough supplies. They've been buying supplies. New crop sales are at record high levels. And also, if you look at the premium and the deferred hog contracts on the Chinese market, they can lock in some profits right now. They can lock in some opportunities. So we're anticipating stronger demand as we get into the last half of this year, which should support that those soybean imports and even maybe some corn imports as well, as they're worried about a tight corn supply globally, and Ukraine is basically off the market. That leaves them coming to us.
Bill, are the soybean prices reflective of that right now, though?
Well, we're the production cycle in South America is kind of wrapping up. So I think that's becoming more of a known, but like what Arlan was saying, our production cycle coming up here is going to be a super unknown, especially with the weather risks. As far as the demand goes, we started out the year with a very soft demand curve. And now in the last month or so, couple months, we've really picked up the pace. Like this last week, we had, 48 million bushels in sales. We only need about 2.5 a week to meet the USDA projections. So I agree with what Arlan is saying, and that is we could see export numbers from the USDA WASDE report increase over the next, as long as we can keep these exports strong over the next few weeks. That's a real likelihood, which could reduce our carryover a smidge.
Well, risk may be on the feed user side. I mean, Bob, when you look at the hogs and pigs report this week, it shows that hog herd continues to decline.
And I think that's everything I'm giving to the country. The feed prices are high prices is not going to motivate people to expand. Well, a few guys are, but overall, it's going to be hard pressed to, in the inventory and the market numbers, second year in a row, we're down. And I think there's demand rationing coming in. And as one hog producer told me, he says, I think the American consumer better get ready because we're going to be paying for pork what you've been paying for beef. And that's all going to lead to some demand resistance. But at this time, if you're a hog producer and you're hedged, I don't think you want to be short the board. You want to have a limited risk exposure because this is a time over the next, I think for the foreseeable future, where your upside potential could be pretty strong. You want to keep a floor in the market in case something happens on the downside, a surprise. But the risk really, I think, lie on the hog sector with the upside, and you want to control your feed cost as much as not controlling your selling price.
Yeah, Arlan, on both hogs and in cattle, when you look at the liquidation that we're seeing on the cattle side, looking at the hog herd continuing declining, do you think there is a lot of upside potential when it comes to those proteins?
Yeah, on the positive side, I think we probably hit the peak on placements and we're going to start working lower as we go forward, particularly once we get past Labor Day because of the shrinking cow herd. As said well on the hogs as well, the demand seems to be there. We're losing China as a buyer of pork, but we're seeing the consumer come in. But one of the concerns that we're seeing is with high inflation, the consumer may be cash rich because all the stimulus that's still in the economy, but still doesn't like paying the higher prices. So we're seeing a shift down in value, especially into beef right now, maybe fewer steaks and more hamburgers. So we are starting to see that shift in consumer buying.
All right. Thank you all for joining us this week in a big week in the market. So thank you so much for that insight. Let's take a quick break and then we'll have much more right here on US Farm.